Yeah, we would like to greet you people in Singapore. You are on Economic Buzz, the English talk show program that outlook the economic issue for your business. We are still talking about rebuilding the capital market confidence with Mr. Vicky Amarnani, market strategist, monex investing in futures. Oh, if you're talking about the we already talked about the recession or the things so-called crisis, economic crisis,
yeah, just
global
to put in
crisis.
a summary, I mean, the Asian economy is weakening, Europe is in crisis, US is slowly recovering. I'm not saying we're going to see a big global crisis anytime soon. Governments, G20 governments are all supporting it, but yet we are in a very sensitive situation, and we have to watch it time by time, basically.
So one of the ideal strategy is to stay logic. How is actually investors can do this? I mean, like seeing those indicators in Europe or USA or China, you know, the economy is slowing down. How to stay logic in this kind of situation?
Well, I mean, it depends what your focus is on, but the main key is that you should diversify all your investments. And I mean, okay, at a macro level, we got to see macro and we got to see micro as well. If you're buying stocks, you got to see the fundamentals of the stocks, despite what's happening in the macro economy. But the first important thing is the sentiment. If the sentiment is right, there's been a good correction, we think everything's intact, then you can go into the micro and check all the fundamentals. I mean, like, see, if you're investing into equities, you can look at dividend growth stories. You can make sure you invest into blue chip. You know, sometimes people like to go into penny stocks, or cheap doesn't always mean value. So you look into invest into good stocks where you're comfortable. That when there's a bit of volatility you have to deal with, you know that you're comfortable with the stock. Then in the future the price will go up, and you're comfortable. Like, for example, Google, Samsung, McDonald's, Disney, AT&T. These are good companies, basically, which have emerging market exposure and are doing well. So, but if you're investing into bonds, for example, for people who invest into bonds, as you know, U.S. interest rates are at ultra low levels, but now there's already fear in the market that U.S. interest rates will rise sooner than expected. 10-year Treasury yields have gone up to 2.26%. So for that purpose, if you're investing into bonds, don't invest into too long-dated bonds, because when interest rates rise, these bonds will tank the most. So if you're looking to invest into bonds, invest into between 3 to 5 year bonds, and keep a good mix between investment grade bonds and high yield bonds, you know. And that's the other point. Again, when you're looking to invest into commodities such as gold and oil, again, you got to find nice tactical entries as well onto them. But most important of all, always keep good levels of cash. In a market where the returns are not so big and the risk is so high, why do you want to invest all your cash? Always keep that. I know sometimes people or investors get tickled that, oh, you know, I'm not earning anything on my cash. I got to do something. U.S. interest rate is only 0.25, or Indonesian rupiah. You know, after cutting tax, I only get like 4%. Don't worry. When markets will be volatile, you will get opportunistic buys, and that's when you can use that cash to do good investments.
So the slowing growth in emerging market like China, India, in Indonesia, how far is it already dampened the global economic market, or the confidence of the investors itself?
We can see definitely over the last 2 weeks there's been a lot of dampening of investor sentiment. Indonesia rupiah has gone above 10,000, like we had mentioned, because people have pulled off $800 million from stocks and bonds. So that's infected. Basically, if people are pulling out of rupiah and going back to dollar, then obviously the rupiah will weaken. And then on top, the trade deficit is weakening in Indonesia. The international reserves of Indonesia have dropped. The government has not done any intervention as of now. It seems that they're comfortable with the rupiah weakening. But if rupiah goes on to 10,200, 10,300, which I believe it could continue to weaken, there may be some intervention from the government, but don't expect any strong strength in rupiah, Indian rupees, Brazilian real, all these emerging markets. So we are in such a situation where the currency is weakening. And then foreign investors, because especially for Indonesia, let's look at Indonesia, more than 50% of the stock market is invested by foreign investors. So if there's a panic in the market, investors are running out of, pulling out of the stock market, the bond market, that will definitely impact on the stock market, on the indices, and on the sentiment. So this is the similar situation which is happening to other environments or other countries as well, like such as India. India's currency has gone to all-time high of almost 58 Indian rupees to $1 US. Likewise, same issue.
So if you start to compare the internal and external sentiments, which one is affect more? If you're talking about the updated situation right now in Indonesia, which one is affect more? The external one if you're talking about the data, today we have some positive data from USA, and then we have some positive data from Italy and Germany.
Yeah, so, those are, I mean, those data, it's always plus minus, but overall, if you look at the three biggest economies, those are the most important ones: China, US, and Europe. Europe unemployment is still at 11%. GDP, debt to GDP is still very high. Some countries such as Greek and all are still above 100% of GDP. So there's a slowdown in China in terms of growth, from expected to be between 6%. So all the slowdown, the currency weakening, sentiment, all this is impacting on investments, and this could affect even other investments such as property, is affecting commodities, affecting stocks, bonds. So investors need to be cautious, basically.
One of the countries that has already give the major effect in the moving or the what you call it, the level of the price of the commodity in Indonesia is China. So how do you see this? How do you see actually this kind of thing will be, I don't know, continue?
I think it will continue. We'll continue to see softer commodities, especially for the sector in commodities and metals. I would tell investors to be cautious, because the outlook is still negative. If you see commodity companies, steel companies, their revenues are dropping, prices are falling. It's still on a downtrend. If there may be some rebound, but there's definitely not like a trend reversal or anything. So like we had discussed about gold as well. Gold has dropped down to $1,365.
Gold is no longer safe haven.
No, gold is no longer safe haven. I mean, the thing is, basically, with U.S. rates expected to rise, I mean, the gold price, international price, is quoted against U.S. dollar. The gold price now is $1,365 per troy ounce.
So is it the right time to get into the gold? We're going to continue after the break.
Sure.
Yeah, more of this discussion about rebuilding the capital market confidence will be brought to you soon after this one. Stay with us on Economic Buzz.